Okay, our first question is, over the past few years, what factors, for better or worse, have had the greatest impact to frontline underwriting? We had quite a bit of discussion, and we had both positive and negative. It seems like automation versus personalization.
Louder.
Automation versus personalization. What's happening is some agents think that they can't get a hold of a person at a company, and if it doesn't fit the model, it doesn't fit their underwriting on their computer, it's not going to get approval. The economy has some effect. There's a big focus on pricing, as was discussed here earlier. CSRs have time. There's time and expense for them to properly underwrite. They have goals and objectives, and they have a very short time to do it. But with that, on the good side of it, automation has also improved the ability to frontline underwrite because there's fewer surprises. They can go onto Google Maps. They can run history reports for claims. They can get building characteristics. So they can try to shorten their time, but you got to weigh the time spent on getting this information, and then if there's any hair or something different on a risk, it's hard for them to get to people to do some thinking outside of the box. So that's some good and some bad there.
Last few years. Sorry about that. Credit scoring. And we also said honesty. Well, you got to be honest up front, because this way the insured's going to get the correct price. You can't try to fit that round peg into the square hole.
Okay. And for those of you tables who didn't have that question, when it talks about what are some of the biggest factors that you've seen to underwriting risk? Any other input that we would have? Okay.
One of the things is that, along with talking about exceptions, is that companies have fewer underwriters. So
okay.
It's either in the box, it fits or it doesn't fit. And so if it doesn't fit, finding an underwriter to even talk about an exception.
Yeah,
or getting the answer, well, we won't do it.
Yeah, fewer underwriters at the companies, and then even sometimes more stringent guidelines that they may have in there. It was always one of those questions when I was back in there and I wasn't in underwriting, where I would always ask, well, what percentage of it is art versus science? And it seems like that's been a kind of a moving percentage over the years on there of, we try to make it 100% science. You realize you can't leave out the art, but it's not also 100% art, because that just doesn't make sense given the diversity of the different risks that we're seeing in the marketplace.
But don't you feel that the auto side is more of the science, where the property side, you get more judgmental on qualitative factors?
Well, I guess I'd put out that to the company folks. Do you see a difference in subjective versus objective factors based on the line of business that you're underwriting?
I mean, let's face it, pickup truck, there's X amount of steel in it, there's rationale for why it should be the same value if it's in the same condition, the same mileage. Fine.
Right.
On the other hand, a home built 1940, has it been updated, has it been this, has it that? Looks nice, good thing. Judgment call. We don't write beyond 1952, let's say. We're going to make an exception on this. So that's where I think the art comes in on the property side.
Okay.
Much more than on the auto side.
And would you?
Yeah, there's much more diversification. I'd say probably more diversification in the risk and the exposure. But the data is also not normally nearly as good or as updated or as adequate as on the auto side.
Okay. Yeah, so it's a catch-22 in some situations because of the updating and availability of the data versus the risk you're actually writing at.
And the other reason why I think there's a lot more art in property is the bands, the pricing bands are much wider.
Okay.
And the classic, you have a house that's 5 miles, 100 feet away from a fire station, and we don't write protection class 10.
Right.
Well, wouldn't you rather get the pricing and protection class 10 because it's 100 feet outside of the 5 miles?
Right.
Than you would 100 feet inside the 5 miles.
Okay.
As long as you can write enough of them, again, as long as you write enough of them to offset the probable loss in the 100 feet over the 5 miles.
Well, the pricing should adjust for that.
Yes, the different factors. Could pass the mic right behind you.
But using the 10, we were just discussing it here. If I go to Pennsylvania, Class 10 is 8 miles. If I go to Virginia, it's 9 miles. New York State is 5 miles. Who the hell can give me the actuarial figures to tell me the difference between 5, 8, and 9 miles? As a practical matter, for a volunteer fire department to get the trucks up and running, volunteers in there, you're looking at 15 minutes to do 5 miles. So you're talking an extra 2 minutes to go 6 miles. You're talking an extra 5 or 6 minutes to go to 9 miles. Yet nobody, no insurance company that I've ever asked this question of can tell me the difference between a 9 and a 10 as to what their profitability is, as to whether it's good, bad, or indifferent. Some companies are happy to write 10, others won't touch it with a 10-foot pole. But nobody can tell me why. I mean, and the practical matter is on the road for the fire departments to get there, there isn't that much difference.
But there's no volunteer firemen working at the company,
Fire double.
Well, I mean,
And part of that goes back to the factor that we talked about earlier on there, whether or not it's agents talking to clients, whether or not it's company folks revealing their product to the agents on there has to be more practical discussion and communication around what that appetite is and what the reasons for that is.
but I mean, these distances are generally established by ISO.
Okay.
Now, how can ISO be giving 3 different distances in 3 different states, and then the companies are all saying, well, in Pennsylvania we'll write it because it's 7.5 miles, but in New York State it's beyond 5 miles, so we're not going to write it.
Not only doesn't there seem to be any science to it, but they also have been the same for a gazillion years.
Well, that's
Just
true too.
distances, and they don't recognize the way modern-day volunteer fire departments function under a mutual aid call-up plan.
No,
You
no.
can have the portable pool out there in the same amount of time it takes you to drive the extra mile.
Or even
Right.
just the size and quality of the equipment.
Sure.
I mean, the trucks are bringing
Capacity that they
35
carry, they're no more
gallons of water with
250-gallon tanks, they're 1,000-gallon pumpers now, tankers.
And almost every fire department in those areas has got a tanker, and you're bringing in 2,500, 3,000 gallons of water, and you got multiple tankers rolling at the same time on mutual aid. Does that penetrate to the companies? Hell no.
It doesn't, yeah, they don't have to harness up the wood.
Hey, our question was, what tools are you using to maximize your efficiency to successfully underwrite the variety of risks your agency, and we inserted also company handles. And what we came up with was checklists, training and product knowledge, sticking with trying to, focus on package policies as opposed to multiple monoline policies, comparative rater.
What are some of the best practices that they're actually doing? So that's what some of the stuff that we're seeing on here, but we'd ask table 3 that same perspective.
Some of the things, I'm pretty loud. Some of the items that we had that maybe table 2 didn't mention, the Google Maps. A lot of this discussion was just on the property exposure, so using the Google Maps to take a look at that property. It's a great free service. If you're having that phone conversation with the prospect, now you can actually introduce some unique questions to the rest to see maybe how they're actually answering the questions. Of course, the credit score, information on other policies if it's an existing policyholder. So we looked at it specifically from an underwriting perspective here. Obviously keying, I guess one thing that wasn't mentioned before, keying, making sure we key in all the information. Might eliminate some of the back and forth between the company and the agency. Thinking about that, it's also part of the efficiency is everything that we can do together to eliminate back and forth. So there's a few more.
And if you can see that, because I had a situation at the agency I was with down in Florida. One of the large companies down, a national company, approached us and said, well, John, you're not writing enough business with us on here. We want you to write more business. My point was, you're not competitive. Oh no, we're very, very competitive on here. So I said, okay, I tell you what, I don't want to go back and forth on here, so why don't you give me what your close rates are by zip codes within my area? And again, working on the auto standpoint, because my point was, I don't want to have to quote anybody I'm actually not going to write, but at the same time, I may not be looking at things that other agencies that you have actually are. So when you think about even agencies within your agency plant that are really kind of just knocking it out of the park, that they've got great close ratios, every time they get up to bat, they're getting on base on there. what are some of the characteristics that you say they would have? Have we pretty much captured those, or when when they come to mind with you, what's characteristic about that type of agency?
They're agents who take advantage of looking at the customer as providing more than just one line of opportunity.
Okay.
And I think the agents who take that approach and try to develop a relationship with that customer, it's not just an auto. What else? And you did a lot to extract some of that value earlier in your discussion. But those are the people who I think benefit most from their opportunity to meet with that customer. They're not just looking at placing their auto. They've got a bigger plan for that customer. I think those are the success stories that we happen to see as we, as a company, try to influence that package movement. Going after the one line and spending 15 minutes to try to dig through the 10 different auto rates that are available, and then dissecting the questions that are proprietary to those companies, may not be creating a lot of efficiency in the agency, in my opinion.
Okay.
And I think the more that the agency can do to help increase their sales opportunity with that customer creates a long-term efficiency and definitely a greater revenue stream for their office.
Right.
And
Yeah.
it's hard. It's hard as you're meeting with certain CSRs. You can see those CSRs who are stuck in the comparative rater. And then you can see where the long-term salesperson is definitely more patient. And they may be more patient, and that provides them possibly an easier path to get to that sale.
Right. Yeah, I've always told.
Allowing underwriters to use the policy discount dartboard expedites things too.
Policy just down dartboard. Well, it's interesting because I've always looked at it from a standpoint of, instead of looking at it as selling a policy, it's as, have you made a client? And the point was always like, when you're seeing that client, are you looking at every opportunity that your business has, every product your business has, and basing it on determining what that client's need was? It was funny, I was down in North Carolina having a similar session to this, and it was funny because as I'm talking about looking for all the different products that you could actually be selling them, creating a higher, because we all know profitability increases when you have that. The coverages, you can coordinate coverages, doing all that. And the one lady in the back of the room, she says, "John, so you telling us we should be shucking it to the cob?" I'm like, I have no idea. No idea what that means. So before I agree to it, why don't you tell me what your little local colloquialism actually is? So she started describing how they're in northwestern North Carolina, when they go through and they harvest the corn, they call it shucking it to the cob, because they literally use every aspect of the corn for something. And it was interesting because it's one of the things, what every stalk that came in, they used every aspect of it for something. So the same thing as I tell agents, it's like, have you been looking at your client's E&O? And they're like, oh yeah, no, I didn't mean errors and omissions, I mean employees and occupations. So when you're cross-selling, are you thinking not how much that workers' comp is, but wait a minute, they have 20 employees, times 3. That could be personalized business that I could write that will go ahead and help retain that client the long term, help grow my partnership with that company. Same thing, the O could be occupation. When you're reviewing your personal lines renewals, how many occupations are you looking at to say, oh, well, they're a chiropractor, or they're an electrician, or they're something else? Can you gain profitability and understand efficiencies and operations from that? Because simple question you have to ask yourself is, what other agent in your general area would you prefer that client did business with? Yeah, I know it's a ridiculous question, but isn't that what you're actually saying when you're not actually developing out that complete risk of that person as an insured, that you're doing a high five or a belly bump because, oh, I wrote the auto. Wow, good for me. That's a successful day. Really? Did you give an account discount on that auto? What was the coverage A on that one there versus, the rest of the stuff? Isn't there an umbrella? What's their occupation? Oh, they're a chiropractor? Really? Where's the umbrella? Where's the commercial lines policy for that? Is that going to increase or decrease stability of that client within your agency and have them really look at you as, that's my agent? Now you coordinate coverages, you have the rest of the stuff. It's almost ridiculous. So think about E&O differently. And however you want to think of shucking it to the cob, that's entirely up to you. Question in the back.
You made a statement before about when a company rep came and asked you why weren't you sending them enough business within that zip code, and you just knew from experience that that company would not have been competitive, so you weren't quoting them. But a lot of us do use comparative raters, and I'm making this statement because I know one of my fellow colleagues up in the upstate area was terminated from a company because he used a comparative rater, and it kept hitting and hitting and hitting, but that company wasn't particularly competitive a lot of the times. Even though he had about a $250,000 book of business, and he only wrote a few policies a year with that company, they terminated him for lack of production.
Right.
And so my question is there anybody, does anybody have situations where a company canceled them for lack of production when you could show them that the hits were just not competitive within the inventory of companies in the comparative rater? Now,
Just to add to the comment, that's become common today, that if you're not writing new business with a carrier, it's often their rates, it's not you that's not going. You know, in the old days, you had to use more judgment. So now, if you're going on a comparative rater and you are quoting that all the time, well, whose fault is it? If they just don't have the rates, how can you write the business?
But Alan, even if it's 40% higher than everybody else, it's the right rate. Did you get that memo? Hey, how many of you heard that? You don't have to raise your hand if you're company people that you've ever said that.
But it is also to differentiate yourself. So the other side of it is, there are times that even though they might not be the best rate, they're expecting you to put something together, maybe by cross-selling different products, maybe by selling their quality and your quality, maybe you could place some business. So there's two sides to it.
Yeah, and exactly, and that's a great point, because I think there's a line to which you can cross that. Again, I'll always tell you, I never sold the least expensive policy on there, because most times I could actually add the value to it on there to say, this is what that actually is on there. Yes, that one is less expensive every month when you pay your premium. It becomes exponentially more expensive if you ever what? Have to file a claim. And that's the reason why I was in business, for that to go ahead and have companies complete on their fiduciary responsibility when you had a claim, not every month that I was your hero because I saved you $3 in what was going on. Harvey, we haven't heard from you in a while.
John, can I have the podium, please?
No, I will not relinquish the podium.
Just like to make a statement following my friend over here. Above the Tappan Z, everybody's an agent. Below the Tappan Z, everybody's a broker. As far as competing with each other, upstate, downstate cannot compete with upstate. As I said, everybody's writing a BOP. Now I'm talking about commercial, not personal.
Okay.
Everybody's writing a BOP. Downstate will not, upstate will not write downstate. They have a problem with it. So it's not just a matter of rates. It's not just a matter of quoting. It's a matter of, can you get it written? Plus, you know, I wanted to ask, I hope I'm not getting off the subject a lot, but...
That stopped you.
What, Jeff?
Since when did that ever stop you?
It didn't. That's why I'm talking. I'm finding now downstate, being out there as often as I am, we're having tremendous competition with foreign companies. I don't want to mention what country, I don't want to mention names, but we are having quite a bit of competition. And that also is a lot of stuff that is getting written that our standard markets can't get written. So it either has to go into the E&S market or let one of these foreign markets admit it. So we're having a problem there too. So what I'm trying to say is that it's not always rates, it's the ability to get it written.
Right. No, I agree with you. That's a great point. I know we've talked a lot about the personal lines, and I appreciate you bringing the commercial lines aspect of it. And that is the ease of doing business, is not always thinking about that's the cheapest price. Sometimes it's just putting paper to the risk on there. Okay. Anybody else running into that or having any sort of success against that? Or is that just a play in the foreign markets to gain market share at this point?
My findings is that if, it's probably the predictive stuff, but if company A does so-and-so, company B, C, and D are going to do exactly the same thing. If you have a risk that canceled for whatever reason, I don't really care, claims underwriter judgment, etc. You're going to let an automatic rejection across a significant portion of the market. You then end up going to some specialty companies, but I'm seeing, in terms of processing, 2- and 3-page supplemental questionnaires beyond the accord form with all sorts of what I consider extremely extraneous questions, but I have to assume the types of questions they're asking are being produced by these black boxes. I don't know. I can't get an answer from anybody. Why are you asking these types of questions? I assume everybody else in here is dealing with the same nonsense, to say the least.
Okay, which doesn't help with a lot of the operational efficiencies, right? As far as getting back to our regular question on that.
Well, our question was, with regard to predictive analytics, what eligibility criteria are you most or least clear about? I think from both the company and agency perspective, we're most clear about credit score. It's been there a while. I think everybody understands it. I think sometimes there's an from the companies who are talking, some of them use it for eligibility only, some of them use it for pricing. So, but I think it's been out there enough, the consumers hear it enough. I think, I think that one seems to be one everybody understands. The eligibility criteria, the driving record, those are the pretty standard ones. I think the ones least understood, at least from an agency perspective, is the fine tuning that's developed. If someone pays in full, they get a bigger discount than someone who's on EFT. If someone has a postgraduate degree, they get a little better credit than someone who made it through high school. And they get a little difficult just to simply write an account. I was just relating to the people in the office, people here, that one of my CSRs was trying to write somebody, and so the questions are, what level of education do you have? Do you have a post degree? What is it? What's your occupation? How far do you work? What's the address of where you work? Because they're going to check, and we're going on and on. He's like, I'm not applying for a job here. I'm just looking for insurance. But because of all these, and every carrier has their own little twist, it becomes very difficult to remember to ask all the variables. It really sometimes takes away or slows down or you lose the sales process because it's so long and there's so many different ones. It's very difficult, and it's very difficult to explain to them how all those translate into a better risk.
It's one of the ones we're looking at. I think it's more of that 80-20 rule. It's like, really, when you go ahead and you put up all the factors, does 80% of it have a pricing factor on only 20% of the price? In other words, yeah, here's the 1,000 things. Now, which of those actually affect the overall price versus, just minor changes that go into that? Because you're right, I think it goes into that whole sort of sales process of, okay, I don't even understand why that question has any sort of relevancy to what we're doing on there. Any kind of feedback from those of you on the company that know about some of these other sort of things to kind of jump in on that, of maybe suggestions in which way that way can either be positioned, or in fact why in some of your various rating models that may actually be important on some of what seems to be more ambiguous type of questions or variables?
John?
Yes.
Some of them they're not as big, like, credit scoring will really dictate which tier you're going into.
Right.
As opposed to some of these other factors, they could be 1 or 2%, discounts, or they could change you from tier 35 to tier 34. So it might not be that much of a difference, but when it all adds up together, it's more predictive of where it should be.
Okay. Okay, so it's not, it's the sum of the total versus the individual ones that has that. Okay. Yeah, and I think that's a lot of it is getting that into, the types of sales processes that you may have on there. And again, can be ones where you just get, instead of asking them individually on there, is like, tell me about your educational background. Boom. And sometimes it's just bringing out questions that will then have people reveal a little bit different, rather than what's the highest level of education you have, what did you actually major in, what school did you go to and everything. You can consolidate some of those questions. I actually had a homeowner's client one time that, sat there, I just bought a brand new bungalow. And I'm like, I have no idea what a bungalow looks like. Did you want a virtual tour when you bought that? And actually, oh yeah, well, I'll tell you what, instead of me asking a bunch of questions, why don't you describe to me, take me on a virtual tour of your bungalow. And I just sat there and shut up. And I mean, the lady just, well, she was so excited to tell me about her house and going up through there, and I'm just writing down all the things that are on there. You can do the same thing. Tell me about your business. You know, what are your priorities? What's going to be the difference between your business next year and last year? What did you actually have? Use good questioning techniques to drive it out. What you'll find is by the time you're done, if you had to ask 40 questions to get all those variables, sometimes you can ask one question, a couple of clarifying questions, you can get it done with 3. It's a lot of the way you get clients involved in the things that are
My
on.
name is Kevin Connors. I'm an independent insurance agent, and the first thing I'd like to do is congratulate Paul on his comments up there, because I think he did a good job of articulating what a professional agent does. So good job.
I paid him to say that.
I'd say that one of the things we came up with is our marketing reps and our underwriters, they don't seem to be on the same page. In other words, our marketing rep comes in and tells us to do all these great things. We try to do it with an underwriter, and they usually don't want to write what the marketing rep just said to us.
No.
Is that, are they just picking on me, or is that what everybody thinks? No, the first question, we thought that there was there's difference in score that we see. You could have an auto score that's excellent, but when you run their score on their homeowner, it could come up as subpar, or it could be vice versa. So then it's tough to figure where to rate that person. The other thing is regards the predictive analytics. There's a difference in the national versus local.
Our question was, what would help enhance policyholder satisfaction when it comes to applying underwriting criteria? And it all came down to one word, but in many different ways it would be applied, and it's basically education. The company needs to educate the agent in what they want and how they want it. But in addition to that, the agent needs to let the company know what's important to them and what they need to know. It needs to be a two-way street. The other thing, and Kevin just mentioned it, there seems to be a rather large disconnect with a lot of companies between marketing and underwriting. So there needs to be education of the marketing department by the underwriters and the companies, and they got almost all carriers need to do a little bit better job with that. Even the ones that are good at it still need to improve it a little bit, so that marketing rep isn't selling products that are simply not available within their carrier, and that happens frequently.
Well, there's that old vision that they tell you should have about a company. If you ever think about a company, it's 3 people in a car, and the sales rep has their foot on the gas, the underwriter has their foot on the brake, and there's a product specialist looking out the back window telling you where you've been. And in some cases, you're right. I mean, those voices have to talk, because it's very frustrating. Oh, we'll quote everything. We want to write everything. You pick up the phone, call the underwriter. Not that. Not this. And again, we talked about watches and wallets, as we talked about before. Key that those voices are all speaking really with the same message and the same tone.
And we actually had an interesting thing at our table, is we probably have the only national carrier representative in the room. There's a couple of you here. But actually, one of the things that they do very well is actually national advertising to the client on a risk basis.
Okay.
And their advertising is very much risk-based advertising. So I thought that was...
And what's been the company's thought process as far as doing that? Because obviously, if you're taking that as a priority, what's been the thought process behind that?
That keyword education.
Okay.
We as a company are not just out to educate our agents. Ultimately, the agent is responsible to educate the customer.
Right.
But what we're trying to do is say, customer, there's many different ways you can be brainwashed, came up, to think this way about insurance. Whereas there's professionals out there that will guide you. There's companies out there that have taken the time to educate these agents on what they're looking for, what what the agent should be communicating to the customer. Along those lines, you know, I think you have that brainwash effect out there, be it on price or however, you know, some of these companies show. My example was, you know, at the end of the day, if my ankle hurts, it's easy for me to go on WebMD and figure it out. Well, after 3-4 weeks, I'm going to go to a doctor. Agents, your customer's at your desk for a reason. You know, what can we do as a carrier? What can you do as an agent to help that customer understand the back and forth?
Right. Well, it's interesting. Paul and I were talking a little bit at lunch of, you know, when I was actually as an agent, you know how you have your desk set up, usually a couple of chairs across, you're on this side with your computer. I'd get up and I'd greet clients again. They came in face to face, walk them to the other side of the desk, and they'd sit down, and guess where I would sit down? Right next to them. And I'd look at it and say, John, before we even get started, let me ask you, what will be your expectation of how this coverage will work in the case that you're either held liable for something or to have to go ahead and have a claim? Does that and you think about that in your mind, does that make that uncomfortable thinking about doing it that way? Or your CSRs doing it that way? Because it was. I mean, that person was like shifting around in the chair. And that's fine. Because we talked about that before. My point wasn't to sound like every other agent, but rather to do what? To be different. To differentiate. I want that to be the first time they ever had it. Because, see, I understood that on that side of the desk was where the sale was made. And then when the sale was made, I'd get up on the other side of the desk, sit in front of my computer, and do what? I'd issue the policy. And that was the point that was on there. We don't look at it from that way. Educate them as far as what they do. Even down there, you know, Jim told you, we had 10, 20, 10 on there. I'd have people who walk in, they have $10,000, think they have what? Come on, there's 2 words. You use them yourself. Full coverage. You get $10,000 in property damage. You have full coverage? Nah. We'd have the My Box out there. What you just had with $10,000 in property damage, you have a $450,000 deductible. That's how that works. Believe me, that changed the whole conversation because I had a quote sheet where they would fill in the numbers. They would actually fill in the numbers. And then I'd pull up their policy and say, oh, let's look and we'll see what you have today. You thought you'd need $100 grand, you have 10 grand. That means $90,000 out of your pocket. Next. What's the one, if you hit me, here's the things, loss of pain and suffering, you know, lost wages, all that medical bills, lawyers' fees, and everything else like that. You thought you'd need a couple $100,000. How much do they actually have? $10,000. God forbid somebody else is in the car. Their number doubles, but so there's a coverage up to $20,000. Now we're having a real discussion about things on there. And again, that's why my claim will always be your greatest competitor. Not anybody else in this room, not any captive agent, not any company that you feel like you're fighting against. Your greatest competitor is your own client's ignorance as to what you're about to sell them or have sold them.
What would help enhance policyholder satisfaction when it comes to applying underwriting criteria? Well, piggybacking on Jim and forgive me. Education, of course, is the right word, but also to help the policyholder understand why these other criteria are necessary. Why is there a need for a home inspection? Well, it's to ensure when the company comes out to inspect that there's no traps or hazards that could cause them to be insured, to be sued. It's because if the company comes out and inspects and they see that there's a shingle missing from the roof, it's going to stop them, the client, from having a water damage claim and paying their deductible. So I always like to explain to the clients as to why these underwriting criteria are necessary. Why is there a necessary need for a photo inspection? It's a pain in the neck. Well, it's because the company wants to see the shape of the car that they're insuring in to make sure that if you have a claim, that you present it to the company a car with no damage, good condition, and that you will get paid for that condition of the car that you presented to them. So I think the education, again, and to explain to the client why these underwriting criteria are important.
Can I just add one more thing to that?
Sure.
We all sit here and speak insuranceese, right? So think about things from the other side of the desk. Does your customer really know what full coverage is? Do they know what liability is? Do they know what some of these acronyms that we use, like our ABCs, really are? Think about that. I mean, that helps even me as a customer, all of us as insurance customers, do we take the time to explain what this coverage actually does, what it means, how it applies to them in layman's terms?
Well, it's a great point, because on that quote sheet that I had, the title on the top was, "There's no such thing as full coverage. Now what do you want?" And that's what they actually do. Literally give them a pen, let them fill in the things, then we'd go to the numbers that are on there, because I'd ask them to say, well, that's an interesting term, and seeing as that doesn't exist, what do you expect is going to happen if you have an accident or have to file a claim now that you have full coverage? And it's a fascinating conversation, personally or commercially, that you can end up having onto there. But you're right, that's what it is, and how dare we have that. We've commoditized it. We want to blame everybody else on it, but we have commoditized the business by not properly anticipating and talking about what that is. Alan, I apologize, I went past you there last time.
Okay, yeah. What I wanted to bring up before was, we spoke twice about marketing reps and underwriters and having two different, scenarios. But sometimes just when you say underwriter, there's a team of underwriters, and you could have a relationship or develop the trust of an underwriter and be able to get things done. Or you may have underwriters who you haven't built up that trust. And very often it's not just the underwriter. There has to be a little give and take, and it's more difficult to develop that today than it was years ago. But very often we've had one underwriter that just didn't seem to click, didn't have that trusting relationship, didn't know who you were, and you could switch to another underwriter. Sometimes they switch without even asking, but you suddenly have somebody that understands you, trusts you, and then if you don't violate that trust, you can get a lot done. You may get an accommodation and be able to work it much better. So sometimes when you just talk about a company rep and an underwriter, it's not always the underwriter, which could be anybody. It's a particular underwriter or a particular underwriting manager that just doesn't see it the way you do.
Right. And that's going to be a great point to bring out. We kind of get everybody's feedback on that second question that you all had in common.
Yes, the first question was, what impact has predictive analytics had on your agency's profitability and or policyholder satisfaction? Our responses from the table were that we're creating a lemmings attitude among carriers. If one does it, they all will follow. In some respects, it has helped agency economics by making it more efficient and consistent to place a risk. However, it does inhibit differentiation among carriers. And in some cases, it reduces the field underwriting or the expertise of the agent, the professional agent. We know the market, we know the locale, and it's diminishing that. From a policyholder satisfaction standpoint, it also has a diminutive effect, and there's less flexibility.
Well, we got 4 carriers at the table, and none of them use predictive analytics. So I guess we're in the 18%. Two of the carriers do use credit.
Okay.
Okay. And we think it's kind of sad when companies can't really explain, and producer can't explain the basis of how the rates were calculated. We have an agent here, and he has, all of us agree that predictive analytics has not improved the agent's profitability or our company's profitability, because obviously we don't use it. Now, on a personal note, I think 90% of underwriting can be done without predictive analytics. Predictive analytics might get you to a fine point, but you better have at least 10 points of leeway with rates. So you have a thing called a manual, you have underwriting rules. We expect our producers to know the underwriting rules, and yet you do inspect every risk. And you have applications, and you have a 60-day free look. So really, I don't see a need. Unfortunately, my company uses credit. And as Steve Harris said, we were forced to use credit because everybody else was.
Right.
And it did make a 20-point difference on the loss ratio, so we would, if they outlawed credit, it wouldn't bother us, because then everybody has a level playing field. But as long as you can use it, you're going to be adversely selected against. But my main point is, you have enough in the old, your producer is your first line underwriter. We assign an underwriter to every producer, and that underwriter stays with that producer. And then you have enough tools without predictive analytics to adequately underwrite a risk.
And is that what you would say you would attribute your success to, is not so much predictive analytics, but company agency relationship?
Yeah. A lot of the underwriting rules that have been developed over the years can pretty much identify the good risk from the bad risk.
Okay.
You don't need to have a million questions of whether somebody's a college graduate or whether they're divorced or whatever.
Right.
That could or could not affect the rates, but there are objective factors that definitely affect whether or not there's going to be a loss.
Okay. When you think about from your tables on there, what were some of the big things that came up on that last question? Where we're really talking about, what factors are critical to that perfect marketing meeting. When you talk about it, from whether or not what you want the company representative to bring, whether an underwriter or a sales rep, what it is that you have to offer back into there. Is there anybody that would like to offer anything?
Marketing for 52 years. I'm sure everybody here who knows me, and I have to bring this up because I think this is so important. When you're visiting a broker or an agent, to sit down, not only discuss your own company, but to be helpful as far as what else is going on in the business and who's doing what. They're all your friends. They're all your partners. So if you can help them, other than what you can do for them with your own company, I think you're doing a good thing. And I think you're getting a friend for life.
Okay. Yeah, and that was one of the things I know that I always trained when our reps went out is letting them know, without giving out any sort of details, any individuals, tell them some of the things that your most successful agents are doing. Because who else actually goes out there and sees 40, 50 of your peers, as long as they're not giving away trade secrets or anything else into there, to tell you, hey, Harvey, this is what I see so-and-so doing. They're having some good success at that. Here's some stuff that's going on. I think sharing some of those things from a company rep without divulging who it's from helps to kind of lift the entire industry on there. And John?
Well, from agent perspective, a perfect meeting is when he brings in a large contingency check. But that only happens occasionally.
That doesn't happen.
I think when you have a meeting with the marketing rep, or sometimes they're not reps as much as they are traveling underwriters, and they're prepared to sit down to look at, they understand where your agency's about, what you go after, what type of business, what's your marketplace, and where they fit in. And they sit down, well, here's where we can fit in, here's how we can help. Here's how our products match with what you're out there marketing. I think that's where you get the better fit. That if you got an underwriter in there, as your underwriter said, then I can come and take a look at some of those. So I think that's where you get a good fit. We can get our production numbers. You get them once a quarter. A lot of them come in online. So the old traditional, let's go over your numbers. You can do that pretty much either through email or online and stuff. So it's really, let's get down to how can we write some business.
Right. Yeah, it was interesting because I had the privilege to travel with one of our very good commercial line sales reps out in California one time. It was fascinating. We went to one agency that was just giving all kinds of submissions in, doing a good job as far as writing them, but he actually had 3 different reports that he brought out that said, hey, this is this class of business that you send to us. You sent us 10 of these. We quoted you on them. We wrote 2. Not really a market that we're actually looking at. Here's another one where you sent 10 of these. We wrote 9 of them. You have more of those ones there, we'll take that all day long. And by the way, here's another list of ones. We haven't seen any submissions for you. We're very competitive in the marketplace. We really want to write these. And it was just fascinating to sit there and watch how, in sharing it in that sort of way, that rep actually understood that. I understand, to you, it is about watches and wallets too. You don't want to submit anything to me that I'm not going to write. I understand that. let me communicate back to you what we do and don't have an appetite for. And by the way, here's some things we're not seeing, not sure if you're actually looking at these as well.
Perfect underwriting marketing meeting would be, of course, bringing our underwriter with you to our office.
Okay.
To discuss changes in underwriting, what's new with the company, target marketing with niche markets like you just mentioned before, which you're most competitive in, what discounts could be applied to improve the rate if we're not totally aware of that, and maybe the underwriting department could help us along with that. And to discuss our production and loss ratio figures.
Other ones, if you had to describe, or it's one of the elements of a perfect marketing meeting, either you could be that company person going out there, what would you want to have that agent kind of respond to you, or vice versa?
They could educate staff on their technology.
Okay.
Test drive it, help them see their way through it.
Okay, educate the staff on the technology that the company's using, have it. I love the ideas about the different discounts that may or may not be applied to certain sort of things. And again, especially I would suggest from the company standpoint is, stay away from kind of the one-offs and do much more of what you're going to be doing with the trends of what you see over the course of the business that's on there versus maybe an individual risk, and talk about things more in a general sense of here's what we're seeing or here's what we're not seeing. You know, and I was talking about before with that, here's the business that you're writing in the zip codes. It was great because what I could do is I could look into my own book of business using the agency management system and say, okay, who do I have as monoline homeowners in that zip code? Because keep in mind, when they came back with it, it was anything, and it was really what their close ratio wasn't how many people were quoting them, it's who was actually writing them. Their close ratio was anywhere from 46, 47% down to 1.3. So I knew in those zip codes that were in single digits, don't waste my time, right? So I only have so much of it, but you guys show me a 46% close ratio by my peers in that area, I will go after that business all day long. So just pulled off clients out of my system with homeowner-only business in that zip code, marketed to them like there was no tomorrow. So there's just different ways in which you have that of, that's why I say, share some of the trends that you're seeing as a company and share them to make that agent successful. Any other sort of things before we wrap that part of it up?
Just one don't do.
Okay.
I do not like it when a marketing rep or a company comes in and tells me
about something that hasn't been approved by the state of New York yet. And they spend a half an hour explaining about the new bot program that's not approved. It's going to be approved in a year to 2 years. Or the new billing system that's not finished yet. It's just a waste of time. Tell me 30 seconds that you have these things, that you have a bot filed and that you have a new billing system on its way. That's all I need to know.
Right. Yeah, it was fascinating. We were doing business planning one time, again down the agency of Florida, and the company rep came in and said, okay, John, what can we count on for you for next year? And I said, well, before we go that fast, let's have dinner and a movie here first. And so, as we were talking about it, I said, all I want to know from you is, okay, what are you going to be doing next year that you didn't do last year to improve your position in the market? Go. And they're sitting there like, well, we've got this coming out, and when can I expect that? Oh, it's going to be second quarter. Okay, third quarter. So I wrote that. So really, no impact there. Oh, then we're making the system change and everything else. When is that plan? Well, not till like fourth quarter. Okay, next year. So by the time we were done with all the things, I said, it's okay, let me kind of summarize in here. Pretty much you're going to do the same thing. Your product is exactly the same as it was the year before. So you've made no changes, no enhancements to position yourself better in the marketplace. So why don't you put me down for what we did this year? And that's what we'll do next year. And it's having those type of conversations. And again, I position that from a company perspective. If you got things that are going to be to a competitive advantage that are going to, as Paul talked about there before, are going to be advantageous to his clients that are out there, that's fine. But just let us know, because we'll go out and we will sell that if that is to an advantage benefit to them. But don't waste our time on, thoughts that you're having on there versus the things that you're actually doing. Any other questions, inputs from that aspect of things? Okay, really kind of summarize for me is, because you guys have done a great job, great participation on there, great at keeping things on a very high and positive note on there. So then we should just end with Dilbert, right? And all I can say on that one there is, and I thank Jim for this slide on there, is just remind people that profit is the difference between revenue and expense. This makes you look smart. And that's really what you're trying to do, is you're trying to, in very simple terms, whether or not it's from a company, letting agents know is, this is where we've got to be profitable. From an agent, being able to make sure that you are keeping that partnership and going through and submitting risks and placing risks on the company of the things they actually have an appetite for. At the end game on that is, they're going to make money, you're going to minimize losses, that's going to create profit for which you all can have. Like I said, I love the one comment on there is they bring a large check. I always love that large check because the large check is usually associated with what? Profit. And we even called that thing profit sharing. And the point always is, if there was no profit, there's no sharing. Please, before we end, Harvey.
I want to thank you. I think you did a phenomenal job, and I think you deserve a round of applause.
Thank you very much. I appreciate it.